Hello, warriors. And in this world, you have to be one, or you'll get run over and there'll be tire tracks on your back. And I really have a fighter with me here today who fights for his ideas on social media and everywhere he goes. Tom Luongo, great to have you back on
Thank,
TradeGateHub.
thank you, Dale. I appreciate the opportunity to sit and chat on a beautiful
Yeah,
day here in North Florida. Can't get any
yeah,
better than this.
yeah. Last time we talked, we were facing the government shutdown, the big
Mm,
one that McCarthy came and delivered a deal that ended up being his demise, that
hmm
gave Biden pretty much an open checkbook to keep the government open.
Yep.
And the headline there was when Biden spoke, crisis averted. To me, it was crisis postponed, and it's still being postponed.
Yep.
But people want to know, Tom, and before we get into the meat of the markets, I want to know if Taylor Swift is really a Pentagon asset.
Oh, I have no idea.
All right,
I,
anyway.
yeah, I don't play that. I don't
uh,
play in that. I don't
all
touch in that
right.
world.
Anyway, it's
I have enough
facetious
false
anyway.
narratives to deal with on a day-to-day basis, Dale.
Uh,
I don't want to. The less said about Taylor Swift, the better. You know what I mean?
oh,
So,
here, doesn't she do that all the time? The heart. Anyway,
yeah,
then let's move on to things that are immediate here. What are your expectations of the Fed today?
nothing.
Okay.
I expect Jerome Powell to embody what Jim Rickards used to say um, about Mario Draghi when he was in charge of the ECB. He says little and does less.
Okay.
Um, at this point, I think Powell has told the markets what he intends to do, and the markets refuse to believe him. And uh, and the more I dig into my argument, I have a very specific thesis about what I think is going on. And I believe that our Treasury Secretary Janet Yellen is engaging in yield curve control, where she's controlling market the rates on U.S. Treasuries and manipulating the yield curve, along with Christine Lagarde at the ECB and whoever's in charge this week over at the Bank of England and the Bank of Canada. I think it's very clear that when you dig into, I was just doing this for my patrons about an hour ago. As a matter of fact, I updated my argument about this, and I've written about this on my blog. That since Powell started raising rates, the amount of U.S. Treasuries that have been bought when you when you break it down by region by various central banks, you see that that China gets all the headlines about selling, but the Japanese sold an awful lot as well. But no one talks about the amount that the eurozone has bought. Okay, and
Okay.
it's more than overwhelmed the amount that China has sold and Japan has sold and anybody else has sold. The eurozone has been propping up the U.S. debt markets and for a long time now, and they're doing so in order to maintain the fiction that European sovereign debt is still a better bet than American sovereign debt, right?
Okay.
And that we have to maintain certain credit spreads. And I can get really geeky and technical on this stuff, but the reality is that if you can control the perception of the demand for U.S. Treasuries, then you can control pretty much the perception of the demand for literally everything else in the world.
All right.
And so
I know that you're
that's
much more bearish Europe than the U.S. and
oh,
you
absolutely.
think that if there is, there are people calling it a global sovereign debt crisis.
hmm
But I've heard sequencing that perhaps it begins in Europe, spreads to Asia before it
Yep.
lands on our shores.
Yeah,
What do you think
absolutely.
of that?
It's been my primary thesis for a long time now.
Okay.
I am a fan of Martin Armstrong, and Martin's
Pie to you.
analysis going back 10, 12 years now has been to say that
Yeah,
this is where we were headed. And it was
right.
Martin really that convinced me a long time ago to stop being a stupid gold bug. I mean, I love gold, don't get me wrong. I mean, the name of the thing is Gold, Ghosts, and Guns, but I understand gold's role. And I think I understand it better now, today than I did 10 years ago when I first started writing for Newsmax. So, like, yes, I think that Europe is the sick man at the table. I've done innumerable podcasts with my friend Alex Craner discussing collateral and the state of who has and who doesn't have collateral for their bond markets. And when you talk collateral, you're really just talking about energy. And when you sit down and you really just boil everything down to like a kind of a simple narrative or a simple reality, sets of precepts. Who has collateral? Who has energy? Who has resources? And who doesn't? Well, clearly, Russia has resources. We have resources. Canada has resources. Africa has resources. Southeast Asia has resources. Who doesn't have resources is Europe. And so when you take that and then you turn around and you say, well, who are the people that are advancing this anti-carbon agenda of climate change? Climate change is all about reducing carbon. It's about using less carbon. Well, who doesn't have any carbon? Who doesn't
You showed a chart of carbon compared to silver,
Yeah.
and you tried to buck up the silver longs by saying, look, this chart's even weaker,
Mm-hmm.
right? So
Yeah.
what's going on in that carbon market? And then I want to turn to gold.
Well, what I said the other day was like, I just said that, if the silver investors think that, they're in dire straits, right? Because, silver is like radically undervalued, according to them. And I believe that silver is an industrial metal, not much of a precious metal anymore. Then, go ahead and look at carbon credits, right? The carbon credit market is collapsing. From a technical perspective, it just made a new
Right.
it just made a new 5 or 6 year low the other day. That's what I tweeted out the other day. I just said, look, we're all like sitting here, crying in our beer because we all want to be long silver and want silver to add a digit to its price. But the reality is, you should be looking at carbon credits and going, we're winning because the market for them is collapsing. And the point of all of this is that when you think about climate change from a geopolitical strategic perspective, you realize that this is a project centered around the European Union and what I like to call Davos. And now that I'm getting to the point now where I can just say Davos, like it's such now a popular, it's become a popularized term. Like, they're the ones without any collateral. They're the ones that want this Agenda 2030. They're the ones that want all of this, a new system. Well, that new system is simply to advantage them over us, over the rest of the world that still has plenty of oil and still has plenty of natural gas and still has plenty of coal and everything else. They don't have anything. And if you ask me a simple question about why Europe is so angry at Russia over the Donbass, it's because that's where all the coal deposits are. And that coal that high quality coal and natural gas, and there's lots of natural gas, by the way, in the Donbass, that they were planning on taking that for themselves, adding Ukraine into the EU and then strip mining the country in order to affect their transition. And all that coal is flowing to China, by the way.
Okay.
FYI.
You know what? You bring up nat gas, and I've been talking about it because of what I see technically, and I was so glad when I went to your website that it was something that you cover.
Yeah, absolutely.
Because this is what I'm seeing here on a technical level. So they call it the Widowmaker. So there's
Yep.
plenty of widows out there, Tom. I'll give you advice. I'm hiding out. Okay. All right. Anyway, it looked to me like this week, which was, the end of January, right around here, we had this final capitulation move called an exhaustion gap.
Yep.
And then we rallied to fill it. And even though we were diverging on the daily, we weren't on shorter time frames, like the 4 hour.
Mm-hmm.
But and I said, therefore, we'll have a retested low, a new low.
Mm-hmm.
And that's exactly what happened here. And I don't think anyone's long nat gas right here. And it looks to me like we have a pretty important turn, or at least a pretty good bear market rally ahead of us. Give me the fundamental narrative to back up what I'm seeing technically.
I think you're right about that. I would say that the reason we got this secondary capitulation low in that gas is timed directly with the executive order that Biden put in place to stop exports of LNG.
Right.
And why would he do that? Well, he'd do that because he's a traitor to the country and he hates Texas and he hates Louisiana and he hates all these states. But at the same time, he's also, there's also a little bit of a blackmail on Europe saying, oh, by the way, we're not going to even sell you natural LNG anymore, right? You've got so now the Europeans have to go back and start buying Russian gas again. Now, by the way, they're buying Russian gas by having it go all the way to Bermuda, get reblended, and then sent back to Rotterdam. And this is part of the reason why, if you look at the TIC report, you'll see that Bermuda has been steadily adding foreign, basically U.S. Treasuries to their balance sheet. But I think that's only part of it. I think there's other things going on there as well. But it's like that's part of what we're seeing here. And we've had this is all happening during the coldest week we've had in the U.S. in a long, long time. Like, it was crazy. We had the big polar vortex, sent temperatures down here in North Florida into the 20s. And we're all talking about the Texas, electricity grid collapsing, and natural gas gets crushed from 350 down to 210. It's insane.
Yeah. So, do you deploy assets into natural gas when you think that there's a good buy zone? I talked to an associate of mine, Mike Venezia, and I brought up nat gas to him yesterday, and he showed a lot of equities, nat gas stocks that have been holding up really well in the face of a monstrous decline in their underlying commodity. And I go, wow, if they could hold up with nat gas prices collapsing, that's a headwind. What happens when they turn? So, do you like nat gas stocks?
I mean, I do. I have a couple in the portfolio. I have we have exposure to nat gas in that way.
Okay. All right.
I have, generalized oil as well. I mean, like, I'll give you this one for free, is there's not much of a secret that I'm a huge fan of Shell, have been for forever and a day. And there's a variety of reasons why I'm a big fan of Shell, not the least of which is that it's the most politically savvy of all of the oil majors. It's always 6 months to a year ahead of the curve politically. SEHL is the ticker symbol. And the reason why, so there's that. And then, Shell is a massive natural gas producer, not in the US, mind you, but in general, an LNG producer for Southeast Asia. I've always been a huge fan of this company, simply because they're always so damn ahead of the curve. They were the first ones to get out of Alaska when that turned against them. They were a year ahead of that. They were a year ahead of selling off all their North Slope assets. They could see the writing on the wall. And then on top of everything else, they moved their domicile a year and a half ago out of the EU because they could see the turn coming politically there, and moved back to being domiciled in the UK.
Okay.
So, if I'm buying an oil major, right, I tend to stick with Shell, and I don't tend to like to buy more than one company in a particular
sector.
I mostly, when I put a portfolio together in the newsletter, I tell my people all the time, these are ideas around themes. These are not necessarily, they may not even be the best stocks in the area. This is the theme, and the theme is oil majors. Of all the oil majors, which one do I like the best on balance? Shell. Does this to say that ExxonMobil is not a good buy? No, this isn't.
Right.
Or Petrobras or anybody else. It's just to say you want to think in these terms. You want to think in terms of, is coal in a bull market? I think so. And I think coal going forward is also a very interesting play.
Yeah, uranium has really been on fire. I'd like your theme in gold, because you brought up Martin Armstrong, sees both sides of the gold market. And I'm
more bullish on gold than Martin is. I think Martin, and I don't blame him for this. Like, Martin spends a lot of time. I do this as well. We all have our egos, and we all don't like it when people, yell at us. And gold bugs have been yelling at Martin for 20 years, and he has every right to be frustrated with them as he's trying to beat the dead horse that gold isn't an inflation hedge. He's right about that.
It's a monetary hedge.
It's a monetary hedge against institutional collapse. It always has been, and he's right about that. And understand that it's a trade like everything else, and I get that. And I have the same problem with, my libertarian brethren on certain other aspects of the market as well. It's the same kind of thing, like the Fed. We've never watched the Fed be competent. We've always watched the Fed, our entire lives, we've watched the Fed sell out the United States to the rest of the world. But what happens when what does that look like when the Fed doesn't sell the United States out to the rest of the world? Have we ever seen that? in
Will
our
we?
lifetimes? Not since Volcker, right?
And he's not
Greenspan.
Volcker. He turned into Arthur
Well,
Burns
that's
last.
the that is the perception.
Okay,
But has he cut rates yet? No.
he has not.
He
He
raised
has
no.
not.
He actually has been a very interesting amalgam of both Volcker and Burns. Burns raised interest rates slowly in the mid
Yeah.
70s and then paused, turned the reins over to Volcker, who raised rates aggressively and then cut aggressively and then raised really aggressively, right?
Okay. All right.
Powell
So
just
you're
went ahead and did the Volcker thing and raised aggressively and then held still.
so far.
And
Yes.
the market keeps saying that he's going to cut 7 times this year. And
Right.
Powell has said, that's nice. Where did I say that? Everybody
Okay.
is expecting Powell to cut 7 times this year.
Well,
Don't bet on
that
that.
ties in with
The
your
market,
no
the bond
recession.
market. I'm telling you, the bond markets are completely mispriced thanks to Christine Lagarde and Janet Yellen doing yield curve control.
You
That's
mean
what's going on
by
here,
the
folks.
mixture of debt that they're selling by going with more supply on the T-bill side and less
Yep.
on the long end?
Yes.
That's their
exactly. I called this a year and a half ago before we even started. Before this even got started, I said Yellen's going to sell twos and she's going to sell more twos than tens in order to sell the 210 inversion to tell everybody, to tell the markets that it's that the Fed's making a policy mistake. Then she turns around in 2023 and issues 83% of her debt in 1 year or less in order to try and force the Fed into a pivot this summer ahead of the election. Duh. She works for friggin' Davos. She works for friggin' traders. Who benefits from does the Fed benefit at all by cutting rates here? In any way?
if they're long.
No, the Fed. How does the Fed benefit from cutting rates?
Their inventory of bonds. Their inventory.
No, it doesn't affect it doesn't behoove them at all. It ruins their reputation. We are at full employment. We're at 3% inflation, right?
Well, you're predicting no recession.
What's that?
Yeah, so that ties in with your call for no recession in 2024. Why would they have to cut rates aggressively,
right?
Especially with the market being parabolic and trading over, towards 5,000? If we're not going to have a recession, should I still be long the stock market, Tom?
I would. If we're on the verge of a sovereign debt crisis, if what happened, the big question is, and again, it goes back to this argument about the TIC report that I've been making. If the Europeans have bought more than $600 billion worth of treasuries net over the last year and a half, 2 years that the Fed's been raising rates, and oh, by the way, the rally we just got November's data. The November's data was clear that there was an acceleration, that most of the buying came from Europe.
Okay.
A little bit came from China. China bought a little bit in November.
And hedge funds in Bermuda.
And the British Virgin Islands and Canada and the Caymans and Ireland and France and Canada bought $50 billion worth of treasuries in November alone.
Okay.
Canada.
All right.
All the crown assets bought treasuries to sell a massive run in treasuries, a massive counter trend rally in treasuries into the end of the year, and to stop the bear steepener trade and to end the bond vigilantes from coming back and gutting Europe.
Okay, so here's TLT, Tom, and it was a dramatic rally from 82 to 100. And just technically, and tell me if you could back it up, I think that we're in a correction, that this is not going to be the top of the TLT.
No.
Or the final high in bonds, but that we're in a corrective phase right now. We could even pull back and yields could go up a bit higher.
Absolutely, yields are going to go up. So coming into the end of the month, I don't like to look at like short-term charts at all. I look at nothing but weekly, monthly, quarterly, and annual charts anymore. I don't even look at short-term charts. There's so much noise.
There's your weekly.
There's the weekly. Yeah, you can see exactly what I'm talking about. You had a beautiful rally, and then and then a correction, and now we've had the correction.
So will they be a buy at 90 and looking for 110 or better? Can they keep the game going?
I don't know that. I don't think so. I think we've already gotten if you put up the monthly chart. Let me put up the monthly chart real quick.
Sure.
I mean, remember, they've moved the 10-year 15 or 18 basis points in the last 3 days and ahead of the
Here you
FOMC.
go. Yeah, there's the 10-year and the
Get rid of the
monthly.
Fibonacci sequence so we can actually see what's going on.
All right, but let's just go back to the TLT then.
Yeah,
Yeah,
yeah.
yields have come off pretty good, but you haven't had that much on the back end compared to the
Right.
front end. Is that what you're
Yeah.
saying?
Mm-hmm. Well, we actually they've crushed the bear steepener trade that was in place all month long in the last 2 trading days.
Okay.
Like from the 2-year out to the 30-year, we had a bear steepener going on, and now the from the end of the year to today, just looking at the yield curve, I tried the yield curve and do a time series on the yield curve, and
Yeah.
you can see it clearly. They moved the yield curve back to identical all the way out to 3 years from where it was at the end of the year,
Okay.
and that was not the case last week.
All right.
But the 30
I
years
know.
still, but the 30 years is still holding up above 425. I think they've I think that this is. I'm going to be honest with you. All of this looks like desperation to in order to keep markets within a particular um, um, range and to get monthly closes in order to push in order to try and continue this idea that we're going to get a rate cut. They're trying to sell the rate cut for March desperately, right?
All right.
And
All right.
Yellen issuing all those 2 years and all those 1 years or all those 1 years and shorter were designed. That was designed to drain the RRP facility, the reverse repo facility,
So
in
you're
order to
bearish
get
bonds.
everything that can coalesce around March, and
You're
then
bearish
have
bonds. You wouldn't buy any long duration like.
absolutely.
You would not.
I would be. I expect by
That's an
2026
avoid.
or 2027, I expect to see 9% on the 10-year.
Okay. All right. So there we've nailed that down. I just want to get back to gold because you said you're more bullish than Martin Armstrong.
Yeah.
I assume that if you're bullish gold, you're probably looking at gold shares for your subscribers.
Absolutely.
And I ask everyone this, Tom. Maybe you could answer it. Why are the miners underperforming the physical by such a high degree?
I don't have a good answer for it, especially with oil at these prices.
Yeah.
Other than I don't have a good answer. I really don't.
Okay. All right. Do you
all
like
I can
the
tell you
miners
is that
down here? They're cheap, aren't they?
They're just cheap. They're just as cheap as you could.
I know you were going to say. Yeah. Manure, right? You were going to say manure.
I'm trying to keep it clean, Dale.
All right. That's cool. All right. So let me ask you this: with you being as bearish on Europe as you are,
yep.
The euro's trading about 108.5.
I expect my long-term price on the euro is like 60 cents.
Okay, so you're a bear.
Oh,
okay, so no chance of, because I actually think there's a chance that we get a pullback in here and we see 120 euro. Would that make it worse for Europe if their currency strengthened? Maybe that could be the trigger for, they're having trouble exporting anyway with a fairly weak currency. What would happen if they had a stronger currency against the dollar?
Well, there's the export argument. The bigger question is what you really need to be looking at on a tick for tick basis is the sensitivity of the euro versus oil.
Okay. Yeah.
Okay, that's the thing. That's the thing you need to watch at this point, because it's for days when you see a big move up in oil.
Yeah.
And the euro doesn't go along with it in order to keep the price of oil in euros flat.
Right. Got it.
That's when they're in trouble. And we're looking for that. I can tell you, like, I watch this daily and I can look and I can go, nope, they bombed oil. Yep. The euro's up. Or they bombed, or, you can tell that they're manipulating one versus the other because they need to keep the price of oil in euros down in order to keep inflation under control, in order to sell the idea that they can start cutting rates.
So if we get one more flush,
the European banks that are in trouble, right? And they're in far worse shape than our banks are.
Would $62 crude postpone everything that you're talking about?
Yeah, we're never going to get there. We're never getting there. We're going back to $100 in oil before we ever see 60.
Why is the Strait of Hormuz going to be blocked?
We have a structural deficit in oil production.
Well, we've had it from for a couple years, right?
And the Chinese dumped their SPR, and we dumped our SPR.
Okay.
Onto the market, and we keep and the U.S. is at highest marginal production that we ever expected. U.S. is
Okay.
producing 13 million barrels a day. So,
Okay. All right.
into that, that's why the
But
OPEC
the
Plus has
bulls
been
have been saying this all the way down, and this was after the SPR was dumped, but it was
sure.
here.
And watch but look at that chart. What was that? The weekly chart?
Yeah.
Do you see see what I see
Higher
anytime.
low.
No, I don't like looking at West Texas Intermediate. I only look at
Okay.
Brent, by the way,
Okay.
because
All right.
Brent's all that matters because 85% of the world prices versus Brent. WTI
Okay.
is irrelevant. And
Okay.
even there, you can see the WTI. Look at the
Next time
lows.
I
You have a
get
series of
stopped
higher
out, I'm going to
lows.
tell my broker that.
What's that? I just see a series of higher lows on the WTI chart, meaning
Okay.
that
Yeah.
and that's all the rest of it is just coiling and manipulation on ice.
Okay.
That's it.
All right. I think we've covered
There's your breakout. As a matter of fact, there's your breakout in the
right
last
here.
week. You can see the breakout right there. Yeah,
Yeah, it
that one.
broke out over the 50-day moving 50-week moving average.
And I'm not even a
But we're
big. I'm not
back
even. And I
underneath
don't
it.
even use moving averages, and I don't use
All right.
RSI. I literally just use candlesticks and probabilities of breaking highs and lows. I look at nothing else. I strip my charts of all extraneous data and just look at the candlesticks. And
Okay, let's talk. Go ahead.
so what we're looking for today on a close in Brent, put the Brent chart up. I'm gonna be frank and honest with you. Ready? So
Yeah.
what a shock. This morning we get the ADP non-farm payroll report and we get a Brent crude build, and both of them were designed. And what was the response to trash the price of oil? Put up a monthly chart of Brent crude, and I'll show you what I'm talking about. And then just dial right into like the last 6 or 8 months. We don't even need to look at 5 years. Just dial
There's
directly in. You'll see what I'm
there's a
talking about.
weekly and here's the monthly.
All
And
right,
you're
if you can
talking about this right here.
and dial in real tight so people can actually can you dial in the time frame so we can only look at like a couple of years the other way. There you go. More. We only need to look at the last 12 months. There we go. Note the Brent futures on that's the monthly.
Yeah. And that's I believe a 200-week moving average here that it's
Yeah.
holding.
Well, okay. So where are we trading? 81.78.
Yeah.
That is not the data I remember.
Okay. Down
I'm not
14
looking at the same
cents.
chart. I'm not looking at where's that on MOEX, not on.
Okay.
That may be the wrong one.
Okay, could
Because
be.
81.54 was the price on ICE that I was looking at as the high from December
Okay.
and January, and we move off of that. If we close above 81.54 today on Brent crude, then we're looking at no, that's what I thought. Then we were looking at it what would be considered a reversal. I look at it as a reversal signal. When you close against the high, the last high in the downtrend, that's all I care
Okay.
about. And they
You're
were
about
gunning for that 81.50 level all day today.
all right, you're an energy bull. I know you cover crypto. Here's the Bitcoin monthly
Yep.
tight.
The Bitcoin monthly chart looks great.
Okay.
Series of higher highs, series of higher lows.
Okay.
It'll probably trade sideways for 2 or 3 months as we go into the halving with all the.
Yeah.
I think if you look at the weekly chart, it's pretty clear that Bitcoin is range bound between 41 and 45.
Would you buy at 30 if offered?
I'm a huge buyer at 30. I just don't think we're ever going to get back there. We'll get back to the series of highs at around 33.
Are any other crypto coins that you're focused on? A lot of people will only buy Bitcoin.
At this point, it still drives the market. And from a geostrategic perspective, Bitcoin is the only one that's interesting.
Okay. All right. Do you think that Bitcoin's being used to eventually get people used to the CBDC, and when are they going to roll it out?
I do not believe that at all. I am of the very minor opinion that Bitcoin is being prepared for a role as hard collateral for the repo markets.
Okay. So all right. So BlackRock did the right thing, and what kind of games are they going to play with their ETFs? I mean, they're the landlord of
the market
America.
is what they're going to try and.
They're trying and corner it.
It's not even. Well, I mean, obviously they're going to try. They are going to try and corner it by keeping their fees as low as possible for as long as possible in order to gain AUM and to drive other people out of business. That's what I think is going there.
Okay.
BlackRock is not what's interesting here. What's interesting is who's the intermediaries who actually do the actual trades. Remember, Gary Gensler forced all of these ETFs. They couldn't settle on chain. They had to settle through a financial intermediary, which in this case is, oh, by the way, JP Morgan and Goldman Sachs.
Yeah.
And they're the ones who are actually going to be dealing with the blockchain. They're the ones who are going to be doing they're the ones going to be doing the work. I've done a series of podcasts with my friend Vince Lanchi, over at
I know
BBL
Vince.
Gold Tech, and Vince and I have done a lot of theorizing about what's going on in terms of how bearer assets and how the important strategic assets, gold, Bitcoin, to a lesser extent silver, are going to be allowed to flow around the world going forward. And we're going to have soft capital controls. We already have them. I think we're both of the opinion that the COMEX gold futures market is going to end.
Yeah.
And that if you want exposure to speculate on gold, it'll be cash settled only, and it'll be through GLD, and then and SLV. And the only people who will be able to make large trades to allow physical gold to move around the world will be trusted intermediaries of the U.S. government, which in this case is JP Morgan, and on the other side of the coin, HSBC.
Okay.
They're the ones who are now the only custodians and the trustees for these things, and they're the ones who are going to make the actual sales when China turns around and says we'd like to buy 100 tons of gold.
Okay.
But they're not going to be able to sit on the COMEX controlling, historically 20% of the open interest on the COMEX in order to fill Shanghai. That trade is going to close.
I want to ask you about silver, and the reason is I was on my Twitter page, Tom, and on the right you see he was having live spaces presentations, right. People doing stuff on X, and actually I saw your name pop up, and you were in Twitter Spaces checking out Calibra Mining, which is a silver miner, symbol CXBMF, I believe.
I was asked to do that one. I didn't know that it was going to be frankly, that it was going to wind up being an advertisement for Caliber Mining, and I begged off after a while. I'm happy to do a space, discussing the general state of the markets, but I'm not there to.
You're not in IR, right?
I am not in that at all. And
all right. I thought maybe it was because you had an interest in it and you were doing some due diligence on it.
Nope.
That's what I thought. So
I was asked to be a part of that, and halfway through it, I'm like, yeah, I don't like being sandbagged like that.
Okay, who's going to be? Let's talk about the presidential election, Tom. You have a call on it?
I have many calls on it. I don't know which one's going to work.
Okay, give us a few. Give us a few options here.
Okay. 2 months ago, I thought it was going to be Gavin Newsom was going to replace Joe Biden. Now I'm mostly convinced they're going to try and force us onto Michelle Obama. I think it's clear that Biden is going to be replaced at some point because he can't run. So that's one. Now the question is, will Trump make it to inauguration if he survives and wins and all the rest of it? That's the big question. There's about 3 or 4 hoops that we have to get through, or the way I put it the other day is about 3 or 4 coin flips that all have to come up heads for that to happen. And the first one was getting rid of DeSantis and Vivek, and then the next one will be getting rid of Nikki Haley, right? So that she doesn't go to the convention with 40% of the delegates to justify why she needs to be VP. Trump has to survive these ridiculous lawsuits in DC courts that they don't try and put him in jail for, being president, I guess. And that's another one. And that's what Haley's holding on for. She's holding on purely because, she's got the backing of international Davos and the Never Trumpers and the GOP establishment who do not want Trump to be the president. And that if the lawfare works and they can get Trump into jail and invalidate him as the nominee, then they can run Nikki Haley versus Michelle Obama, and they win and we lose.
Okay,
that's clearly what they're trying to set up. If that doesn't work, and if what I believe are I do believe that there are countervailing forces. I'm no Q-tard or anything, but I do believe that there are countervailing forces who see the setup for what it is and see this for what it is and are not going to allow this to happen. And I happen to believe that that is centered around the Fed and the New York banks, and not, and not all this other, insanity.
You look at the
Going back
Fed.
to
You look at the Fed completely different than like the guy who wrote Jekyll Island. And there's this guy talking about the great taking.
Yep.
Have you seen that video? I mean, I can't think of anyone.
I'm not going to amplify this anymore.
Okay. All right. Good.
And let me make it abundantly clear why. I have it on good authority, having spoken to people who know him personally, that David Rogers Webb is a good guy, and he's an honest broker. What I have been skeptical of from the moment this book hit the airwaves, and it was sent to me by no less than 24 different patrons,
right,
to read when it was just a PDF. I'm like, this is being amplified on purpose at a moment in time when there's a full court press on to make it look like the United States and its banking system and its political system and its court system and its culture and everything else are being torn apart at the seams. I don't buy a minute of this. So I can separate him and the book, which all the stuff that's in the book is stuff that we knew about 15 years ago from Jim Sinclair, and we watched them.
Yep.
We watched them like do bail-ins in Cyprus, and we watched all this
right.
stuff. And I said to myself, they didn't steal all our. They had all this stuff in place in 2008. They didn't pull the plug. They didn't. They didn't pull the pin on this in 2008, 2011, 2015. Why would they pull it in
2020?
2020.
Yeah.
They had five opportunities to do this, and they didn't do it. Now, they desperately want to do it in Europe because that's the only way Europe gets out of a sovereign debt crisis. So I firmly believe that they're going to do this in Europe. I do not for a moment believe they're going to do it here in the United States, invalidate the concept of commercial banking in the commercial banking center of the world, where the most powerful people in the world congregate, and they're going to kill the golden goose, which is this.
America.
Are you out of your minds? Like, and then there's 150 million Americans with 800 million guns. I just don't buy it. I buy that it's fear porn that's being purposefully amplified to distract us from what's actually going on and to get us to. It's another attempt at it's another
PSYOP.
piece of asymmetric fifth generation warfare against the American banking system and the American political system. Don't fall.
And
it's
the
all
American
this
people.
talk about civil war. It's the same thing. It's just another vector.
I hope this gets 100,000 views for the last 5 minutes of what we just discussed here. I know that it lifted me up to hear you say these things, Tom.
Right.
And you're a watchman for a lot of people. It's great to hear. Keep an open mind, everyone. It'll keep your account open, and keep an open mind. It'll keep your attitude adjusted from hearing from more than just one side. And you're a great representative of what you believe in, Tom. And want to wish you a great 2024. And it was really enjoyed getting back together with you, going over markets and interrupting you about 10, 15 times.
No worries. I wasn't sure how long this show was going to be. So, I tend to filibuster, so it's no problem.
Yeah. Well, what's really great. People should follow you and check Tom out. Go, subscribe to his newsletter. He's got all this material. He's a prolific writer. And if you want to hear from a patriot that still believes despite all, read Tom's stuff. And
I just say that a patriot of what America should be, and more appropriately, that it's still in our power to decide how this is going to go, folks. They're trying to demoralize us to the point where we just give up. No. The Great Reset has morphed into the Great Awakening, which has morphed into the Great Acceleration in order to affect the Great Demoralization. And every morning I watch them try and demoralize markets. Here's a trading tip, folks. Watch oil between the hours of 3 and 8:30. Remember how they used to let gold run from 3 to 8:30 during the European market, and then New York would come in and slam it? Well, guess what? Monsieur Slamé lives
Yeah.
in France now, or it lives in Frankfurt and in London. They're slamming oil and treasuries.
It's not the Fed, because I have guests that say it's the Fed was selling crude
Not
at
the
the
Fed,
recent
it's
high.
the ECB
Okay.
and the Treasury Department. Telling
All
you.
right.
The
Okay.
data's there. Go look for it. You guys
And
have a great day. Thank
and
you.
keep an eye on Europe. Thank you,
Mhm.
Tom Luongo. Hope everyone enjoyed it. See everyone in the room. Don't just count your pips, count your blessings. Adios. Follow Tom at TFL 1728 on X. Thanks, buddy.